Students, I hope all of your paper went well, and this is a quick review of September 24 paper, and I'll also be providing solutions for MCQs which you might have found tricky, almost all the MCQs. And before I begin, if you're preparing for the first group, if you're writing the examination for first group in the September 24 attempt, you can pause this video, come back to it after the exam gets over. This video is more for others to understand what kind of paper was set, and first time the MCQ has been released by ICI, so we'll have a look at that as well. And if you ask me on an overall basis, what is my review of the question paper? I would say the paper was kind of average paper. A lot of questions were simple and straightforward, and the best thing about this paper, what I liked was, there are new types of questions. Like for consolidation, they did not ask a full-fledged balance sheet, but nonetheless, the important topics that I had shared before the examinations while preparing for revision purpose, including your amalgamation, consolidation, final statements, cash flow statements, the borrowing costs, inventories, almost all of those questions of those chapters have been tested. And if you had a good conceptual understanding, if you were able to read through properly without getting confused, then this paper would have been actually easy for you. For those of you, if at all, by looking at multiple standards in a single case study, there might have been some confusion that could have resulted in, you not being able to solve the questions in the given time. But then if you look at some of the questions, very, very straightforward. So quickly, let's have a look at the, questions, the case scenarios, and how do we approach the MCQs, what could be the possible solution. I hope my screen is visible to all of you. If yes, just give a thumbs up or just confirm in the comment section. Okay, so yeah, I can also see it now. So we can start off. So generally we suggest when you are looking at an MCQ question, first have a look at the question, right? So first question is what will be the treatment of legal cost? Legal cost and claim for legal action commenced by Mr. Ravi Kumar in the books as on 31st March. So this is related to AS-29. So then treatment of insolvency of Sheetal Enterprises, amount to be recognized as revenue. And then there is an independent question. So let us look at the case study to answer the first three questions. K Limited sold goods of rupees 22 lakhs to Mr. Ravi Kumar on 1st of February, but at the request of the buyer, these goods were delivered on 10th of April. K Limited sold 2 lakh goods on approval basis on 1st of January to Sheetal Enterprises. The period of approval is 3 months after which they were considered to be sold. So when did we sell? 1st of January. 31st of March of 24 is the time period by which you should confirm whether the goods have been accepted or not. Buyer sent disapproval for 25% of goods. Now see, this is where it becomes tricky. Disapproval for 25% and approval for 50% till 31st March. See, whether they approved or not, if they have disapproved 25%, we can assume 75% is approved. Mr. Ravi Kumar has commenced legal action against K Limited for supply of faulty goods to claim damages. So we are looking at which company? K Limited. Who filed the case? Ravi Kumar filed the case. The lawyers of K Limited have advised that it is not remote yet that resources may be required to settle the claim. It is not remote, but resources may be required. So this becomes our contingent liability. Legal cost to be incurred irrespective of the outcome is 45,000. This is a provision for which we have to create. So the first question was based on contingent liability. So first question was based on contingent liability. So here if you can see, we need to create a provision for 45,000 and contingent liability to be disclosed 5 lakhs. So option C is the correct answer for the first question. Then treatment of Sheetal Enterprises. So Sheetal Enterprises, a trade receiver of K Limited, suffered a heavy loss due to an earthquake that occurred on 30th of March. Loss was not covered by any insurance policy. In April, Sheetal Enterprises became bankrupt. The balance due from Sheetal Enterprise as on 31st March is 75,000. K Limited makes a provision for doubtful debts. Now, in April, they have become bankrupt. So this is a subsequent event requiring adjustment. They have not given us when was the financial statements approved, but still, since it has happened in April, we know there was a condition existing on the balance sheet date, and because of which the enterprise has become bankrupt. So entire 75,000 being the existing event, you have to make an adjustment. If at all you have a doubt in any of the MCQ I am solving, or if you dispute with the answer, feel free to ask in the comment box, because for me also I am reading it for the first time and I am solving it for you. Then the third one is, what is the amount to be recognized as revenue as per AS9 in the books of K Limited as on 31st of March. So when it comes to revenue, the first part, sold goods of 22 lakhs, out of which 75% we have to recognize. So 22 lakhs into 75%, 16.5 lakhs come from this. Then, oh sorry, 22 lakhs fully we have to recognize. I missaid two things. Out of this 2 lakhs, 75% to be recognized. So 2 lakhs into 75%, 1.5 lakhs. So that becomes 22 plus 1.5, 23.5. I hope it is right. Yes, 23.5 lakhs. Okay. Then machinery was given on 3 years lease by a dealer of the machinery for equal annual lease rentals to yield 20% profit margin on the cost of machinery. This is a new type of question. It is a general costing question, I should say. Nothing to do with AS19, which is 3 lakhs. Economic life of machinery is 5 years and estimated output from the machinery in 5 years is as follows. So 3 lakhs is my cost. I want to get 20% profit. So 3 lakhs plus 20% makes it 3 lakhs 60,000. Now this 3 lakhs 60,000 I will not recover in 3 years. I have to recover in 5 years. So what will I do? This 3 lakhs 60,000 I will spread based on the number of units. So number of units, if I do the total, 50 plus 40, 90, 90 plus 60, 150. So 150 plus 150, 3 lakh units. So out of 3 lakh units, 50 plus 40, 90 plus 60, 150 is in the first 3 years. So 50% has to be given in the first 3 years. So 150 out of 3 lakhs is 50%. So out of 3 lakh 60,000, we need 1 lakh 80,000 in the first 3 years. 1 lakh 80,000 divided by 3, 60,000 is the correct answer. Let me know how many of you did this specific question correctly in the answer. If you have done it correctly, your costing concepts are really strong. Okay, this has nothing to do with AS19. This is not an AS19 question. It is a general costing question. Then, A Limited had 1,50,000 shares of common stock outstanding on 1st of April. 50,000 were issued on 1st of November. 32,000 were brought back on 1st of February. Calculate weighted average. Now, there cannot be an easier question than this. Even if you have learned your earnings per share even once, you will be able to score 2 out of 2 here. Okay, good, Paul. I am happy that you have chosen the correct answer. Yeah. P Limited has 60% voting right in Q Limited. Q Limited has 20% voting right in R Limited. Also, P directly enjoys 14% in R Limited. R Limited is a listed company and regularly supplies goods to P Limited. Management of R Limited has not disclosed the relationship with P Limited while preparing financial statements of P Limited. Which entities will be disclosed as related parties? Now, straightforward. Q Limited is a related party and R Limited is also a related party. Okay. Then moving to the next one. J Limited submits the following data extracted from final accounts as on 31st March. This is an extract. So what we will do, we will again look at the question. The amount of cash flow from investing activity. So while you read the question, you have to figure out investing activity. Means we have to read the question itself altogether. So let me quickly, jump into that. So this is all the information. This is information from final accounts. This will not give me cash flow. So, but still, equity share capital, P&L debit balance 9%, loan, advance of suppliers, provision, plant and machinery, furniture, investment in Star Limited. So here there could be something. Sundry debtors, cash and bank balance. Then on 31st March, they decided to reconstruct the company, for which necessary resolution was passed. 9% debentures to be settled by issuing 15,000 equity shares. Equity shareholders will give 40% of their capital in exchange of allotment of new 11% debentures for the 40%. Balance of P&L to be written off. Equity shares issued for rupees 1 lakh. Interest received and advance given to supplier 3,000. This is operating cash flow. Taxation liability settled at 14,000. Debtor of 40,000 is insolvent. Only 40% are recovered from his estate. Dividend is received on investment 1 per equity share of Star Limited. So Star Limited 10,000 equity share, 10,000 equity shares, you will receive 10,000 here, dividend. Part of plant and machinery is sold for 3,000, loss of 3,000, book value 15, so 12,000 this is sold for. So cash flow from investing activity is 22,000. What is the amount of closing cash and cash equivalent? You can compute this. Some fifth one. What is the fifth one? Fifth one is Q&R. I think I discussed the answer. Okay, find the closing cash and cash equivalent. It will require a slightly more detailed working. So I'll skip this. You can calculate it. It is a straightforward question. How to calculate? I'll just explain that to you. You have cash and cash balance here. Then there is a reconstruction activity where you have here there is no cash impact. Equity shares issued. This will increase the cash and cash equivalent. Then equity shareholders will give for debentures. Okay. Then interest is received. So that is already. This is as on 31st March. Okay. On 1st of April, this is what has happened. So question has asked us what? On 1st of April. Okay. So 1 lakh this will get added, tax and liability you will reduce this, interest received you will add this, debtor was 40% settled you will add this, dividend received you will add, part of plant and machinery sold you will reduce and arrive at the cash and cash equivalent. You can do the working. The balance of equity share capital, take the original equity share capital, you reduce what is cancelled, then what is freshly issued 1 lakh, and there is one more transaction, you can do that and you will be able to find that. Amount from cash flow from operating activity also you can do it based on these numbers. What all are the operating cash flows? Okay. Then this is, I think, one of the most simple questions they can ask. Fixed asset held for sale will be classified in the balance sheet as per schedule 3 or as current asset. 2 marks blindly, no problem at all. Okay. Then this is a very interesting question. Vikram took a loan of 6 lakhs carrying interest of 10% on 1st of August. So August, September, October, November, December, January, February, March, 8 months. To purchase raw material. So 6 lakhs to purchase raw material. He purchased 4,000 units of raw material at 125. So 125 into 4,000 if I do, how much will I get? 125 into 4,000 if I do, I'll get 5 lakhs. Out of 6 lakhs, 5 lakhs is purchased, is spent there. Replacement cost of raw material on 31st March is 100 per unit. Okay. Labor charge and variable overheads incurred are 1 lakh to produce 1,000 units of finished good. 1,000 units of finished goods are produced with raw material by using 2 units of raw material. So 2 units are required. Okay. NRV of finished goods is 300 per unit. So what we have to do? We have to calculate and see. $300 per unit, we'll see and calculate and compare. All the finished goods produced are lying in stock as on 31st of March. Okay. There is no opening stock. Perfect. Vikram used 1,500 units of raw material to construct and qualifying asset. Labor and other overhead charges incurred are 90,000 and also 15,000 to install the asset. Okay. This is something to do with accounting standard 16 and accounting standard 10. And here we have accounting standard 2. Okay. Mr. Vikram used balance loan proceeds of 1 lakh. Okay. So out of 6 lakhs loan taken, 1 lakh they have invested in equity shares. Now tell me, is equity share a qualifying asset? It is not a qualifying asset. Equity share is not a qualifying asset. He purchased 9,000 equity shares for 1 lakh on 25th of March. P Limited declared and paid dividend of 20% on 30th March for previous year 23-24. Based on the information, answer the following questions. Cost of self-constructed asset as per AS10 would be how much? Now, if as per AS10, what is the raw material cost plus labor cost plus installation cost plus interest. Sir, why interest? Because we have used loan to purchase raw material, we have used borrowing to construct the qualifying asset. So that way you have to include it. Okay. So what is the cost? Let us quickly calculate. 1,500 units of raw material at how much? 125. So 1,500 into 125 plus labor they have told 90,000 plus installation they have told 15,000. Interest will be 1500 into 125 into, from August, it is August, so April, May, June, July, August, 8 months divided by 12 into 10%. So 1500 into 125, that is 1,87,500. 187,500 plus 1,05,000, these two put together, plus 187,500, 10% into 10% into 8 divided by 12, 12,500. Answer of fifth, I'll come back to fifth. Okay, 12,500. So 187,500 plus 105,000 plus 125,000. 3,05,000. So option C is the correct answer. Now again, let me know how many of you have selected this option, or if you feel there is any other option, you can please let me know. 12,500 is the capitalized interest, and what is the total interest? Out of 6 lakhs of loan, total interest is into 10% into 8 divided by 12. So 60,000 into 8 divided by 12, it is 40,000. Out of 40,000, 12,500 is capitalized, balance 27,500 should be expensed. Okay, so as per A16, what will be the amount of interest to be, oh, the question itself is here, an amount of interest to be charged. So 12,500 to be capitalized and 27,500 to be charged to P&L. What is the carrying amount of investment as on 31st March of 24 as per AS13, and such is the treatment of dividend? So dividend that has been received, the dividend that has been received, it is pre-acquisition dividend, most of it. So what is the cost? Let us see. 9,000 equity shares for rupees 1 lakh. 1 lakh is the purchase price. They declared 20% on 30th March. So 90,000 is the face value into 20%, that is E purchase on 25th, it is on 30th, so most of it we can say is previous year. So 90,000 into 20%, 90,000 into 20% is 18,000 dividend received. So let us see the option. 1 lakh minus so 1 lakh is the investment value, 18,000 is the pre-acquisition dividend. So carrying amount of investment as on 31st March is 72,000. No, dividend is deducted, yes, but it is deducted from 1 lakh. So 1 lakh minus 18,000, we get how much? 82,000. So 90,000, no. 1 lakh, no. 80,000. Option D is the correct answer. What would be the value of closing stock of raw material and finished goods as on 31st of March? So this is a standard 4-mark question actually. If you had, if they had asked the question as a normal examination question, it would have been for 4 marks. But here they are cheating us and asking only for 2 marks anyways. So what is that? What is that we have seen? Raw material is 2 units into 125. So 125 into 2, 250. Then labor and variable overheads, 1 lakh to produce 1000 units. So variable overhead plus labor, 1 lakh divided by 1000, 100. Okay, so the total cost is 350. What is the net realizable value? Net realizable value is 300. So cost or NRV, whichever is lower, we will take 300 multiplied by how many units? 1000 units. They have said nothing has been sold. So finished goods is 3 lakhs. Okay. Then raw material, because finished goods is being sold at below cost, we will value the raw material at the NRV or the replacement cost, which is 100 per unit. How many quantity of raw material? See, we purchased 4,000. Out of 4,000, we use 2,000 here, so 2,000 is left. Out of 2,000, 1,500 is used here, so 500 is left. So raw material will be 500 into 100, that is 50,000. I hope I have got the correct answer. 3 lakhs and 50,000. Closing stock of raw material 50,000, closing stock of finished goods 3 lakhs. So this is the correct answer. Question number 8, 9, 10. Did I not do it? 8 you can calculate, and it will take a lot of time. This also you can calculate, balance of equity share capital, by considering equity share capital, how much is cancelled and how much is freshly issued. See, the reason I am not calculating in detail is, a lot of you might be watching, even though I tell you not to watch, you have exams day after, right? So conceptually, those which are very tricky, that is what I am trying to solve it and give it off to you, so that you don't have any confusion. That's what I am doing it fast. Somebody said fifth. Yeah, fifth you can calculate. Fifth you can calculate. See, 1,50,000 is for full year into 12 by 12. Then 50,000 is on November, December, January, February, March, 5. So 50,000 into 5 by 12. Then 32,000 is bought back. 32,000 into 2 by 12. This is minus. Okay. So 1,50,000 plus 50,000 into 5 by 12. 50,000 into 5 divided by 12. 2833. So 150 plus 2833 minus 32,000 into 2 divided by 12. So it comes to 15,500 plus 150, 165,500. Fifth option, option B is, I didn't want to calculate because I don't want to waste your time currently. So that is it. We have done 14th also, 15th also we have done. So if you see MCQ, out of 15 questions, even if you are confused for a couple of questions, 10 to 12 questions were easily attemptable, and that is what I have been telling in my revision videos also, in my marathons also, what I conducted. And generally I tell the students, conceptually if you are clear, you will be able to handle this. Now the interesting part comes in the main question. Here we will be doing more quick discussion. In the first question, following cases record journal entries for amortization book in the books of Hughes Limited. Company acquired patent rights for 340. It's on 31st March. Okay. On 1/4/22, estimated product life is 4 years. Amortization was decided in the ratio. So they are given cash flows in the ratio you have to calculate. Company had developed know-how by incurring expenditure of 80 lakhs. Know-how has been used by the company since 1/4/18. Useful life is 8 years. From the year of commencement, that is this date, company has not amortized an asset till 31st March. So this is a prior period item also. So till 31st March of 23, you will consider it to be a prior period, and then remaining you will do in the current period. This is a standard question from AS-15, very simple and straightforward. They have given us opening balance, they have given us how much is the benefit paid, then how much is the contribution received. So fair value of plan asset, this is the opening balance. Benefit paid, this will reduce the plan asset. Inward contribution will increase the plan asset. Fair value of plan asset closing balance is given here. Now what is the question? You are required to find the expected and actual return. For expected return, take 10.5% on the opening balance, and for actual returns, calculate the expected returns. Calculate this. Basically, this minus this plus this, compare with 750, you will get the actual return. This is a standard question, and you should have been able to score 5 out of 5 in this. Then, Delta Limited is working on different projects. Those are likely to be completed within 3 years period. Recognizes revenue from these contracts on percentage completion method. Financial statements for the year ending 21, 22, 23 are 34, 50 and 65. For income tax purpose, completed contract method. Recognized revenue of 30, 52 and 67 for these years. Okay, so in accounting it is 34, 50, 65. For tax it is 30 less. If you recognize less, it will create a deferred tax liability. 50, 52. Now this is a reverse case, so it will be a reversal of DTL. And 65, 67. Again 65, 67 also is a reversal of DTL. Income tax rate is 30%. Calculate the amount of deferred tax asset and liability based on the difference you can calculate. And total tax expense for the current year. So they are saying total tax expense for the current year, but they have not given us profit. What they have given is revenue. We don't pay tax on revenue. Okay, we don't pay tax on revenue, we pay tax on profits. So this is somewhere which is incomplete. Here is what it looks like to me. At least DTA and DTL you can calculate. Okay, J Limited I have already done the detailed calculations. What I'll do is I'll calculate in a detailed manner, and then I'll share a maybe PDF in a day or two's time. If you are writing examinations, I suggest by the time you are clear with the MCQ, you would be in a good good position. So don't overanalyze at this point of time. That's my point. Trial balance of Shivam Limited is given. 31st March they made bonus issue 1:2. Authorized share capital is 35,000 equity shares. On the advice of independent valuer, revalued land at 245. So what is the land value? Land is 148, so there will be a revaluation surplus because of this. Directors declared a dividend of 10% on 5th April and transfer profit of 10% to general reserve. Now 5th April 24, this is 31st March 24. Will we adjust? We will not adjust. Suspense account represents cash received from sale of some machinery. Cost of the machinery was 10,000, depreciation 8,000. So 10 minus 8, 2,000, and 3,000 is the cash received, 1,000 is the gain. Simple adjustments, nothing complicated. Depreciation at 10% on cost, income tax 30%. You are required to prepare P&L. So this is a standard question. There is no complexity, I would say, as far as this is concerned. Then, so this is a straightforward 14 marks in your pocket. On basis of following data, prepare cash flow statement. Total sales are given, receipts. So this is a similar question which you will find in the study material, where they have given what they have given. They have given various items, and based on that, we have to calculate the cash flow. Okay, so is there any difficult adjustment here? Let us see. Receipt from credit customers. Okay, total purchases 220, out of which 80% were credit, so 20% was cash. Same, and the share metal also. Opening balance of credit are 84, 92, and with the purchases figure here, you can calculate amount received. Suppliers of other consumables and services were paid 19 lakhs outflow. Employees were paid 20 lakhs in cash outflow. Preference shares were redeemed. So this is a financing activity outflow. Issued equity shares face value 20 lakhs at a premium of 20%. So 20 lakhs plus 20% inflow. Debentures 20 lakhs at premium of 10% were redeemed by issuing equity shares. This is not a cash flow. This you have to give it as a part of note. 26 lakhs were paid by way of income tax outflow. New machinery costing 20 lakhs was purchased in part exchange of an old machinery. Book value of old machinery was 13. Vendor agreed to take over the old machinery at a higher value of 15 lakhs. Balance sheet to vendor was paid in cash. So whatever is the cash component, you have to calculate. So this is the same question what is there in the study material. Similar, I would say. Dividend of 15 lakhs was paid on 30th March. This is no longer applicable, but because they have done a copy paste work, they are still considered dividend distribution. So this also is an outflow in financing activity. Debenture interest 3 lakhs outflow financing. During their 8 lakhs rent was received from property held as investment. In cash flow for investment, 0.5 lakhs interest was earned on advance payments to supplier of goods. So when you earn on advance payment of supplier, it is operating. Now, in this type of question, which is asked for 7 marks, even if you don't know a couple of adjustments, you will be able to handle it, right? That is what we suggest to the students how you can do it. Aeronaut says the following capital structure. On 1st April, they want to buy back equity shares. Required to calculate maximum permissible number of shares to be bought back. It is duly authorized. Resolution is passed. So again, a straightforward question. Following is the balance sheet of Nice Limited and Well Limited. So they are given equity share capital and all of those things. Details of trade receivables. So again, similar question is there in the material where you have intercompany adjustment. Nice Limited absorbs business of Well Limited on the following terms. For 5 equity shares held by equity shareholders of Well, they receive 3 in Nice issued at a premium of 20 per share. So this is your purchase consideration. Value is face value plus rupees 20. 10% debentures of Well Limited were allotted such 9% debentures to bring the same amount of interest. So whatever interest they are earning, that divided by 9% will get the number of debentures. This is not your purchase consideration. Preference shares were to be paid 10% discount by issue of 9% preference shares at par in Nice Limited. This is your purchase consideration. Banks agreed to waive 270,000 of Well Limited. Now here Rohit MCQ answer has been covered initially. Banks agreed to waive off loan of 270,000 of Well Limited means what? They have reduced the liability. So when you take over you will take over the reduced liability. Expense on liquidation of Well Limited to be reimbursed by Nice Limited 55,000. So you will add this to your goodwill or debit it to capital reserves. Inventory is to be taken over at 10% more value. You will add that. Debtors include 215,000 receivable from Well Limited. After taking over, you will do the cancellation. PPE was revalued 20% above their book value, additional value. Remaining assets were taken over at book value. Okay. Record journal entries in the books of Nice and prepare balance sheet. Again, we had revised consolidation. A simple question, I would say, to solve it in the examination. On 1st February, Best acquired 80% shares of Pool, and 31st March, Best also acquired 25% shares of Good Limited. So if you remember, I had done a question in the class where we had both consolidation as well as associate. So they are given best, cool, good, limited. The best part of this particular question is they are not asked a full-fledged balance sheet. So they are just asked trade payable consolidated. So what you will do? You will take holding plus subsidiary minus if there are any adjustment. So wherever there are adjustment, we will see here. Bills payable are these. Best held only 3000 acceptance. Endorsed in favor of creditor. Costing 5 lakhs at price of so much unsold. Best limited preparing consolidated financial statement. So is there any further information here? Trade payable including bills payable. So here there has to be an adjustment because of intercompany adjustment. Again, current assets, holding plus subsidiary minus whatever adjustments are there. Minority interest, take on the date of acquisition, add the subsequent changes. Is there any subsequent change? Yeah. So P&L balance and then subsequent change. So basically, they have only asked us working notes. They have not asked us the complete balance sheet. They have just asked us the working notes. Goodwill capital reserve on acquisition of pool, simple. Goodwill calculation on good, again simple. P&L account consolidated, you will take holding plus share from subsidiary plus share from associate. Don't forget this. General reserve, revenue from operations, holding plus subsidiary minus intercompany. Cost of material purchase, holding plus subsidiary minus intercompany. That is how you have to approach this. Coming to the last question. On 1st of April, Mr. Day had 25,000 shares. On 31st July, they issued one bonus share for every 5 shares. So this is on investment account. So again, straightforward question. This was more easier. Example of cost which are not included in valuation of inventory. Your selling and administrative abnormal losses and all of those things. Following scheme of reconstruction was approved. So here only journal entries without narration is asked. Then following is the information of Kullu branch. Goods are invested branch at cost plus 20. Branch sold at invoice price plus 25. So 100 plus 20 and on this plus 25%, or you will say multiplied by 1.25. That is the selling price. Stock at cost price so much, goods return, sales by branch, expenses. You are required to carry certain profit earned by the branch by preparing trading and loss account and find the closing stock reserve. Simple question as compared to generally in branch accounting they have very complex questions. Here it is a very simple and straightforward question. Okay, so the idea of this was to give an overview of how to see some of the critical MCQs and overall approach to solve the paper. Paper might have been lengthy for some of you, but overall the paper was average, and I hope all of you have done well. Will prepare well for your upcoming paper when you look at law paper of law. So start with maybe other laws in the evening, and tomorrow morning you can start up with your corporate laws. There also try to score maximum in MCQs, and of course theory, how much ever you can do, you will be able to do. Thanks a lot, and have a good sleep. Paper is over. Don't worry of what was the answer, what was not the answer. You would have got some comfort after having looked at the MCQs, right? MCQ answers have been done at the beginning. You can have a look at it. Okay. Sure. Thank you.